Hi, everyone, and welcome to Mobile Nation Stock Talk, our new podcast focused on the mobile markets. I'm Rene, and your host for the show is Chris Umiastowski. Before we begin, I just want to remind you that while Chris is an analyst and a consultant, he is not your analyst. Everything said or implied in this episode is for informational and entertainment purposes only, and shouldn't be taken in any way as a replacement for personal, professional guidance. Chris, how are you?
Hey, I'm good, Rene. Thanks very much for the intro. Appreciate it. And so there's really two of us here that are have a background in the stock market. Myself and Ed Zabitsky, who will introduce in a second. We're looking forward to having a really engaging show. We'll be following along with the chats, and we'll be using the feedback from you guys out in the audience to decide where we take the show in terms of how much detail we go into, how basic we keep it, how complex we get it. Anyway, I think a lot of you probably already know me. I've been on Bay Street in Canada here covering tech stocks for over 10 years now, and now I'm doing it independently. And one of my good friends, who I'd like to introduce next, Ed Zabitsky, wanted him to come on the show, and I thought it would be a really good way to bring a bunch of different breadth to the show in terms of different skill sets. Ed has been a tremendous asset to me when I've wanted to bounce off ideas with him on stocks, and I think the guy has an incredible intellect and incredible way of explaining his thoughts. So, Ed, I'd like to turn over to you. Maybe you can introduce yourself, and then we'll get going.
Hi, Chris. Hi, Rene. So I consult to Wall Street on the telecoms ecosystem, and really look at it from a different perspective than other analysts do. Really trying to look at it holistically from the end user, what service they want to deploy, right through the network core. And what I've found over time is that there's a tremendous interplay. I think you'll all agree, being tech lovers, that these pieces fit together pretty nicely.
All right, so let's go. So the first thing we had on our agenda was, well, we'll go by market cap. We really want to talk about Apple, Google, RIMM, a little bit about infrastructure today, but Apple's the biggest tech company on the planet. Why don't we start there? Ed, why don't you begin? I think you've got some interesting thoughts about what's going on in the tech space, and particularly how the consumer is inevitably going to change the way it consumes content and how that might affect Apple.
There's no doubt. First of all, anyone who'd argue whether Apple created this whole mobile ecosystem that we have now, it would be a crazy discussion. But what they did was took us from nothing, from cell phones that could do email and a little bit of internet, and created this whole ecosystem that we have today. People can argue, well, it's so close, but there wasn't anything when they came along. And what's happening now, though, inevitably in tech, you get standards, you get higher bandwidth, things start changing. And thank you to Apple, but here we are today, and people have multi-megabit wireless bandwidth, and they have HTML5 just on the horizon. That's about to change things again.
Why don't we begin and talk about the way HTML5 is changing the landscape here? I think that impacts Apple, that impacts RIMM, that impacts a bunch of players. But we've got some changes going on here where Apple invented the entire app ecosystem. It's a pretty closed environment, and now there's a pretty big push towards HTML5 so that developers can develop multi-platform in many cases. And I'm not talking about the super intensive 3D gaming so much, but simpler apps, obviously. And we're looking at how this is going to change the way app vendors and content owners go directly to consumer rather than to have to ask permission from somebody like Apple to go through their store and pay that 30% tax, etc. What are your thoughts on that, Ed?
Well, it's very similar to the desktop. So the desktop went from desktop-centric, really device-centric, to network-centric as broadband was rolled out across the world late 90s, early 2000s. And that really opened things up in that the browser and the internet became the main way of accessing things. And you had more of less of an app-centric model where you paid, you know, I don't know how many I don't know how many people bought CorelDRAW, but no one's buying stuff like that today, and unless you're a professional. And so things move out in the network, and we move into advertising-based models. Now they are developing web-based models that people can also pay with, HTML5 based models specifically. PayPal is an incumbent that's moving that way, and all the big guys want to move that way because it 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 connects them closer to their customer. Now, the way to think about it is it's not much of a change for the consumer. They go from clicking on an app icon to going and clicking on a web browser icon. So, in reality, I don't think it's going to be a great change in the experience. Just like you mentioned, not for 3D gaming where you need to be running native code on the handset, full tilt, in order to keep the gamer's attention. But for the rest of the world, we're moving more toward a network-based model. I hate that, five-letter words that begins with letter C because it's so poorly understood. But once things move out into the network, then people realize, hey, my content is out in the network, and it's really that content guy that's giving me the content. All these guys are just intermediaries. They're just packagers, and that's anywhere from Apple, Google, RIMM, Microsoft, to Verizon, AT&T, Rogers, etc., etc. All these guys are packagers, and the value is elsewhere. People are going to want their content anywhere, and they're not going to want to pay for the same content twice. And that goes from apps to Hollywood movies. Once you've paid for it, you've paid for it.
And I think, a couple of years ago, there would have been a lot more debate and question as to whether Android was going to turn out to be as successful as it has. I think Android's gained a lot of steam, clearly in the United States. Earlier, you and I had been talking about what Verizon's doing in terms of offering LTE devices and data plans that are much more attractive than the 3G data plans. And the only LTE devices available right now on Verizon are what OS? They're Android, right? So what do you think that might do in terms of creating more momentum for developers to support multi-platform rather than, say, the guys that are just Apple? And what do you think that might do to margins in the industry? What do you think Apple's response has to be here?
I think there's only one direction, and it's not Apple specific. It's that what these are computers. They're small computers, and ultimately you have a commoditization of the entire industry that is irreversible as we go to basically everyone having one of these in their pocket or in a sleeve carrying it around. There's no going back at this point. No one can recapture what Apple did, and everyone. I was just at Telco TV in New Orleans. Everyone's trying to be Apple, except they're trying to be Apple of 5 years ago, and that's where Apple was shooting back then. Apple knows they can't hold back the tide. They're participating as much or more than anyone in the HTML5 standards because the choice is either to accept commoditization of the industry or to become irrelevant. And I think they choose to accept commoditization and choose to remain relevant and keep the value of their brand as much as they can.
You got any comments, Rene, so far? You usually have something to throw in, so.
Yeah, absolutely. I mean, I think right now we're at an incredible crossroads where HTML5 applications are finally starting to be robust enough to have the local storage, to have extensions in the web browser powerful enough to give people a native experience. And I think that was a big holdup. Someone would go on an iPhone and flick a scroll list, or someone would go on an Android phone and use the native app, and it just wouldn't quite be right yet on mobile, and they couldn't maybe put their finger on it, but they knew it when they used it, and they would go running back to native. But now when you have companies like Google and Facebook really pushing the boundaries of web apps and showing people that they can have their Facebook on one platform, and if they switch platforms next year, they're not losing their content, it's coming with them. I think that's the really powerful value proposition that the web apps are holding.
That's interesting because it kind of makes you wonder if somebody is going to create a cross-platform app store. I mean, I'm sure there's probably one out there, but I don't think there's anybody that's like a major player in that space
like
yet.
Amazon or Facebook.
Yeah, like we all don't go and say, oh yeah, just go over to Amazon and buy your app. But I mean, if somebody does it, and yeah, Amazon, Facebook, something like that makes a lot of sense. You can just buy your app, and when you change devices, you just log on to the store, and it recognizes whatever platform you're on, and it gives you the download that you want. It gives you the persistence, and the cloud-based data is all still there. And I mean, that seems like it's the most likely place for this whole industry to move, in which case it totally supports everything Ed's been saying.
Which is why I like what Ed said with Apple being so smart. The original iPhone app model was the quote-unquote suite web apps back in 2007 at WWDC, but I think they realized quickly the performance wasn't there yet, but they've always been adding, and now RIMM at their recent DevCon has been, all these companies are adding this HTML5 support at a very aggressive pace. I mean, Adobe canceled Mobile Flash yesterday in favor of HTML5.
Yeah, it's interesting because, I mean, last month at the BlackBerry Developer Conference, RIMM pretty much came out and said, we're not supporting Java, and Flash is an intermediary solution, and it's going to be basically HTML5 and native, and that's the only two forward paths that we have. And I think that makes perfect sense. It's the right answer.
It gives you the best of both worlds. And we have this interesting thing right now where you have web apps in native wrappers. Like a lot of Google stuff is an Android or an iOS wrapper or a BlackBerry wrapper around basic web views. Even the iTunes Store is a web view, and I think that's the transition period we're going through now.
And absolutely, it is a transition period, and you really can't. I'm not trying to minimize just how real the App Store is or how many things have to change along the way. I mean, I've been talking to, for example, I spoke with QuickOffice, and QuickOffice, it was still, as of last year, they were still staying native because of the performance lag that they would experience, and that's just as spreadsheets and presentation software. And I think that really told you where the market was then. Now I believe they're developing for HTML5, and it's going to take some time. But I guess my point is that we're when we think about it from an investor perspective, we're thinking about what's going to happen, a year, 2, 3 years down the road. We're taking a trend that we can see now close enough in so that people don't say, oh, you know what, that's years off. We want to see the catalyst being here and the trend, the direction being in place.
Yeah, I think that's a really good point, Ed, that we've got to look out beyond where we are right now. We've got to anticipate where things are going. And if we end up in a multi-platform world where app buyers expect to be able to use their apps on most devices that they own or that they're going to own, then it really does create a situation where the hardware is much more of a commodity. And to your point, it's much more like the PC market. And I think I'm correct in saying that Apple generates huge gross margins on the iPhone, and I believe lower margins on the iPad, and probably lower still margins on the Mac lineup, right? Yeah. So, I mean, I'm an Apple shareholder. I love Apple products. I'm using them right now, and they just keep filling my house and costing me money, and I love them. But I have a feeling the margins are going to move towards where they are on the MacBook line overall, right? Or the Mac line, I should say, not the MacBook line, but the PC segment of their gross margins.
We should actually have a show on that one day about what Apple does with the factories and the financing in Asia to try and keep their technological edge. That'd be a good show.
Yeah, that would make a lot of sense. So I think that's a pretty good intro to where we're thinking things are going in the mobile device market. I mean, it sounds like we all kind of agree margins are going to be under pressure, especially when you have some super powerful Android devices. And obviously, I mean, that's competition for everybody. Why don't we take a little bit of a trip down memory lane here? For over the last year and a half, RIMM's been getting slaughtered. We were talking on the last or I guess it wasn't we, it was Kevin and the gang on the Crackberry podcast talking about how the stock was trading below book value. I wrote an article for the site. Ed and we did some math. The tangible book on RIMM is, what is it again, RIMM? Ed, right now it's like 13 and change, I think, per share.
I believe it's 1336 or roughly that.
Yeah. Yeah, so for the people who don't know, I know a lot of people on the call probably already know what that means, but just for the benefit of those who don't, it's the value of the company's assets minus its liabilities, excluding things that are considered intangible, which in this case includes patents and includes anything like purchase and goodwill from purchases that they've done, acquisitions that they've done. We sort of ignore that. So 1336 is RIMM's tangible book value. And I think a lot of people would agree you got to add in some kind of value for their patents because this is an intellectual heavy industry. So with the stock basically trading about $4 higher than that, or something like that. I haven't checked the quotes in the last 10 minutes, but about $4 higher. I mean, that pretty much means the market is treating RIMM as if it'll never make money again, and that its patents are probably worth no more than $2 billion. Anybody got any thoughts as to how realistic that is?
If the brand is dead, then it's actually paying too much for the stock. But having said that, if you believe there's some good news coming, if you believe there's an inflection point, it would be when you get down to tangible book value, the hard assets of the company minus all the liabilities, it would be a great time to be betting on it. Now the question is, of course, is it a great time to be betting on it here? And I think that really comes down to how well BBX does, and maybe you guys want to make some comments on that front.
Yeah, I totally agree. What about you, Rene?
Yeah, I think RIMM is really stuck between a rock and a hard place because they tried to get the playbook out fast to show off BBX, and they got hit really badly because it wasn't quite ready yet. And now there's rumors of BBX being delayed on the superphones because they want to get it right, and they're being hit because they're taking their time to get it right. So it seems almost no win for them at some point.
Yeah, no matter what they do, they can't seem to get it right for Wall Street. But I think what Ed said and what you seem to be agreeing with, Rene, is the future of RIMM really depends on BBX. And in the meantime, we have BB7. And I was thinking, I don't know if you guys are going to appreciate this metaphor or not, but I feel like Apple and Android and the world of the competition is firing bullets at RIMM, and they've been bleeding subscribers. And BB7 sort of coagulates the blood for a little while, but there's still fresh bullets being fired at these guys every day, and they need BBX to build up that shield or step out of the line of fire and fight back.
And Kevin is saying in the chat room that they're going to show off the superphones or the BBX at CES.
Well, if he's right, that would be fantastic. I think that would be helpful. So, I mean, RIMM has to prove that it can stay relevant. I think we all agree, bottom line, that's what RIMM needs to do. And if they can, then it's not going to be the kind of stock that trades at tangible book value or even slightly above tangible book value. I think it'll trade at a much larger premium, and it'll get valued the way it should get valued down the road, which is based upon future earnings projections, not past measurements of its balance sheet. That said, they have a long way to go to prove that they're going to be a sustainable business, and all the book value numbers tell you is that the street does not believe that these guys will last.
Well, I have a question for both you guys, because it's something that I think maybe we need a little bit of help understanding, is how fast the mobile market is, where Apple can come out of nowhere in mobile and get a huge share. Google can come out of nowhere, where existing manufacturers can have ups and downs and reinvent themselves. Just because a company's down this year, there could very easily be a reversal next year, right?
Well, yeah, and I think we talked about how Apple could be fighting pressure on gross margin for devices, and that will change the sentiment on Apple very quickly, just like the sentiment on RIMM changed very quickly when the street started realizing that RIMM was going to lose market share, and it did not matter what the current earnings were for RIMM. People were envisioning a massive decline in earnings and valuing it based on that.
And Kevin's asking about the international story. Does Wall Street not care about RIMM making headway in emerging markets?
Yeah, I don't. I think that the Wall Street view is that the United States is a leading indicator for the rest of the world. I don't 100% buy that it is. I think in many cases it can be a leading indicator. In many cases, things are different in other countries. That said, that's the way the street is reacting. It's a very U.S. focused market, and it's a U.S. focused stock market, and therefore the stock market tends to look at what's going on in the United States. And I don't know if you have anything to add on that, Ed.
No, not really. Actually, I wanted to go back to the prior point, because if you look at every smartphone vendor who's obsoleted all the apps that people paid for, they were the market never the consumers never forgave them. And so once it's okay when you have a dumb device that people pay for, that's what they expected. But if people load their platform with apps and you ditch it, that's people retain that anger for a long time. So now, first of all, that goes against RIMM with what they're doing now. But then the question becomes, well, is RIMM a bet on HTML5? Will they benefit from it? And I'm not sure I know the answer, but I think it's an important question for them, because RIMM as an app company is dead. People are fed up after that. Anyone who's gone through that, Nokia, Palm, whoever, you just get sick of it.
Is that why they have their Android app emulator for tonnage, as they called it?
Yeah, which is an admission, basically, that you're dead as an app company.
Yeah, I think I would. I don't want to sound overly negative, but what I believe RIMM is doing with the Android player is saying, hey, you know what? We need real help here getting developers onto our platform, and if we can get a foot in the door by allowing them to port their Android app over very, very easily, then hopefully we can market to them. We can show them what cool things they can do on the BlackBerry platform. We can convince them that there's actually money to be made. So it's not so much the merits of programming on BlackBerry as a developer. I think they're trying to convince developers that there's money to be made on that platform with over 70 million users, migration to BBX happening, a huge footprint in enterprise. So, I think that makes sense. I mean, that's what Alexander's job is right now, is make sure all these guys out there who are doing Android apps understand they can make money on BlackBerry.
Yeah.
Anyway, we've probably beaten the BlackBerry horse to death on this call. We also wanted to talk about, Ed, let's talk about LTE. LTE is starting to get rolled out. And, I think we've already drawn our conclusion here that LTE, it's a very macro-style rollout right now. And you're going to have a lot of fiber-fed base stations. You're going to have a lot of bandwidth. Rene, I think you got yourself a Rogers device, right?
I did. Rogers was kind enough to lend me one of their LTE sticks to give it a test drive to, and it was actually fairly phenomenal. I was sitting in Starbucks getting 50 gigabits down and 10 gigabits up, which is as fast as my home internet connection. It was a revelatory experience, because it made me start to think all these services, applications, and additional ecosystem that could be built around having that fast a wireless connection.
Mm-hmm. And it really does put the value back in the network then too, right? And just like the PC space became fairly commoditized as a result of awesome bandwidth and broadband capabilities, it does sort of suggest that we're seeing an acceleration of that on the mobile industry as well.
Well, I think the interesting thing is that in many ways, Apple and other smartphone vendors have made the networks feel a bit disintermediated, and they're looking for angles to get back control of the customer relationship. And if they can start offering, I think Rogers at one point was talking about putting cable over LTE because it was so fast. They get a very big hook back into your home.
That would be impressive to see. I have a feeling the bandwidth wouldn't hold up under streaming video situations for the masses, but we shall see. What are your thoughts, Ed? I mean, what have we missed talking about on LTE so far? I'm just looking over the show notes.
Well, you're absolutely right. The rollout of LTE is to increase bandwidth in high use areas in the metro and downtown cores, and it's really it's a cost reduction effort in large part for the carriers, and on a per bit basis, they're going to save a lot of money delivering LTE. and but they're not really getting into the depth of the LTE rollout yet. This is a toe in the water move, and it's data centric. And when I say data centric, I don't mean voice over IP or video over IP. I mean it's just a pure data centric rollout to get things started. And what it means is you're going to see these infrastructure vendors, the Ericssons and Alcatels of the world, and I guess Nokia to a lesser extent, having a interest in NSN. You're going to see these waves of adoption. You had an initial wave really driven by Verizon. It was just a huge lump in their revenues late last year, early this year, and it's fallen back. And you're just gonna, now AT&T is just starting to roll out, and that's the way you're going to see it. You're going to see these big revenue recognition events that are going to make their results go up and then down again. But ultimately, it's going to level out as the number of carriers increases. But I think the real story is the amount of fiber, particularly in the U.S., the amount of fiber being built out, not just by the carriers who are on a pace of increasing their coverage by about 4 to 5% a year in terms of fiber-fed base stations, but they are also going to the cable cos and to their frenemies, the other wireless vendors, AT&T and Verizon, working very closely together, sharing fiber to their base stations.
Makes sense. So, you think that there's an investment story on the LTE side, on the infrastructure side, right now at all, or you think it's going to take a couple more years as we wait for all of the big voice use to also move over to this network and kind of kill the need for 3G?
Well, you really have to look at it where the investment is, and the investment right now is in the base station. So the only area that really has any potential, and I don't mean that on a short-term basis. I mean, really over the next year, the only area that is going to see significant investment, first of all, is the infrastructure, but then second is going to be the switching equipment for a voice and video any-to-any network over IP.
Mm-hmm.
And the technical term is IMS. It's a term you hear in the media every once in a while, and so I think you'll see that that kind of investment start to happen more seriously in 2012.
So, what this makes me think of it is 15 years ago when we started seeing the big boom in optical happening. And I mean, now I feel like we're finally there on wireless. We're getting towards a flat IP architecture with LTE. We're starting to see, big bandwidth and movement into the cloud of devices and services. At the time, we looked at Nortel and Lucent and all these different players, and yeah, they were making money, but sometimes the real money was being made in the supply chain, and it was in the optical space, and it was guys like JDS, Vitel, or Uniphase, or whoever else it was at the time. Do you think the same thing's going to play out here in the mobile space, where the real money to be made is in the supply chain?
I do, absolutely. I mean, there's just, if you look at any type of network technology, over the last few years, you have people selling application environments, development environments rather. You have people selling network stacks. You have people who are, doing every different layer of the chain, and so it can be, in other words, the value of putting it together as a system is going down because people are learning how to arbitrage out the different layers of what goes into the end product, and ultimately, I think it's kind of like the PC market. If you look at who makes the gross margins, it's Intel, and I think you'll have a similar impact on the wireless market.
Yeah, not necessarily Intel, but whoever owns the silicon, I suppose, in that particular case.
Exactly. I'm saying as Intel was
Yeah.
to the PC market, so fill in the blank will be to the wireless market.
Yeah, that makes sense. So I know we're getting on to our 30-minute deadline we wanted to hold the show to today. But before we go, is there any other things that we want to talk about? Any comments from the audience we think we should address here? Where are we at?
We got a question from Power Trip who wanted to know, are there issues involving the voice over LTE rollout or any limitations that's causing it to take this long?
Roaming, yeah, it says is the limitations to roaming on LTE. I actually don't know the technical answer to that question right now, but I can tell you this: it's not rocket science. So if there are issues with roaming, they will be solved.
Absolutely. I don't think it. I think it's a matter, like any new technology, of ironing out the bugs. Carriers don't talk about interoperability very well, but they don't do it very well because their staffs have been thinned down over the years. And so what they end up doing is depending on the equipment vendors and the big integrators to solve their problems. And that takes, there's politics in it, there are standards. It takes a while until all this stuff gets ironed out. But to say, oh, is there a risk it won't happen? It's happening as we speak. It's happening one little bug fix at a time.
Yeah, in the technology space, one expression that has always stayed with me and I remember is that people tend to underestimate change in the long term and overestimate change in the short term.
You think also they kind of, because networks are so expensive and because they've just rolled out HSPA or HSPA Plus, they're doing the LTE data now as a first step, and then they're going to add the voice as LTE Advanced or whatever they want to call the next step along the way, so they can continue to make money along the path and not just do it all at once.
Absolutely.
Yeah, absolutely.
These companies have shareholders and they have an annual capex budget, and it's happening. These decisions are happening at a scale that we just can't fathom.
Yeah. Hey, guys, there's a topic here that I think is an interesting one that maybe we'll bring it up and see how the audience responds, and if they want to talk about it more, we can. But voice minutes, we all pay for voice minutes, and right now, I can't get I'm a BlackBerry user. I can't get a BlackBerry service plan without first buying a voice plan, I should say. And my thinking is that as we move further and further into all IP architectures like LTE, there's going to be a real surge in data-only SIMs and things like that. And I think the expectation of having to purchase a voice plan will go away. And I'm wondering what you guys think, because to me that's an issue for the operators. They will see revenue declines. Right now it's like they're getting the benefit from the voice revenue and the data revenue, but it's all moving to data.
Is that one of those interesting things about the North American market where we get voice incredibly cheap, but we pay a lot for data and an incredible amount for text data, where in other countries where you're actually paying per bit, voice becomes the expensive part of the deal?
Yeah.
Absolutely. I think there's a control that they have that it doesn't matter whether you do VoIP and use up bandwidth or have a nationwide calling plan. They know how to. They're very good at doing the numbers, and they know how to get so many dollars a month from their customers. And it's not going to change no matter what technology you're using. Everyone's hoping for cheap calls to these carriers. They have coverage everywhere. They make it so difficult to go around them. You have to expect that bandwidth is not going to be free, and wireless is not going to be free. We're just going to have a whole heck more of it for the same price.
I don't remember the source, but there was an article a while ago in Scandinavia saying that text messaging was one of the most profitable legal businesses ever designed by man.
Oh yeah, sure. I mean, the bandwidth intensity is next to nothing, and the margin is enormous on it. I think, Ed, you brought up a good point that the carriers will just price their services the way that they want to price them to suck as much money out of us as they can. And I think you're right. So ultimately, the only way that we're going to get a collapse of revenues in this market is if competition comes in and new carriers roll out nationwide networks and allow this to happen, and allow people to just get data only SIMs and go ahead and plug your Google Voice account in, or buy a DID and
become dumb
connect
pipes.
it. Yeah, exactly. I mean,
Look,
your phone becomes your. Go ahead.
These carriers, the big carriers, they have to make a profit. They're deploying huge amounts of equipment, and they're putting up cell sites in places where it just doesn't cover itself. But they're doing it because we'd complain if, while we're driving along a certain mid-sized highway, if all of a sudden our call drops, or we can't get a stock quote or whatever. And so ultimately these guys have to make a return. And I find the whole net neutrality discussion, which is a topic maybe for another show, it's ridiculous. It's a something for nothing argument, and you have to expect that even though, I mean, you talked about Rene, you talked about the carriers disintermediating Apple, RIMM, etc. But I believe they're chasing the old story. Ultimately, what these guys are is pipe vendors,
Mm-hmm.
and they are very good at it. And as we move forward, what the cloud is oh, I said that word. What their network is going to do is efficiently deliver the stuff we want at an amazingly high speed. And that's what's going to make us happy, and that's what's going to keep the stickiness of the account with that carrier. Not that they're going to be the next walled garden provider
At the maximum price the market can bear, right?
Yeah.
Why not?
Absolutely.
Best way to maximize profits. So, should we wind it down, guys? I think we talked on a bunch of stuff. I know we probably missed some things we were planning on talking about. We had some great one-liners we were going to drop and never did, but no, that's fine. Why don't we say this? Let's get as much feedback as we can from the audience, and we'll use the feedback into bringing in the topics that you guys want to hear about, and we'll do some homework and bring you guys our thoughts on it in the next show. How's that sound?
Sounds fantastic. Chris, where can we find out more about you?
You can find out more about me at chrisumiastowski.com, so you have to learn how to spell my last name to get there. And I'm on Twitter at cumiastowski, and that's best way to get a hold of me.
What about you, Ed?
You can reach me at aciresearch.com, and it's an institutional service, by the way. The institution being Wall Street. That wasn't meant to be a joke when I started, but once I was done, why not?
Awesome. You can find me at Rene Ritchie on Twitter or at mobilenations.com. You can find all of us at Mobile Nations. You can email us at podcast@mobilenations.com or leave a comment on the show when it goes live on the site. We would love to hear your feedback, your ideas for future topics. If you agree or disagree, just get in on the discussion. I think that Chris and Ed would love to hear from as many different points of view as possible. You can find all our shows at mobilenations.com/shows, including Android Central, crackberry.com, iPhone Live, iPad Live. We have about 14 shows now and growing. This show is not on iTunes yet. It will be there soon. We will let everybody know, so you can run there and subscribe and leave a rating. And thanks again, Chris and Ed. That was fantastic.
Hey, thanks Rene and all of you guys at Mobile Nations. It's been a fun experience, and hope to do it again soon.
Absolutely.
Thanks, guys.
All right, guys. Ciao.